What's up, guys? Welcome to the Momentum Trading Lab. Please remember to hit that like and subscribe, and let's get into it. All right, so let's have a look at what happened during the New York AM session. So right here at 9:30, this was the New York opening at 9:30. So we had this little Judas swing to the upside, and then they basically moved it all the way down, and they took out the low formed during the London session, and this was just after 3 o'clock. The low was at 14,795, and I believe they also took it below the previous day low, knocking out all of that sell side liquidity. So right there was the previous day low. What is that? 14,782. Okay, and I'll show you guys my trades in a moment. I entered 2 trades today. The first one was a little loss, and then with the second one I made it up. I entered with 2 minis, and then the 1 mini I sold for about 30 points, and the last contract was knocked out for break even, but we'll get to that in a moment. All right, so like I mentioned, little Judas swing to the upside, the little fake move, then they crashed it down, and then this move from the opening, this move is normally till about 10 o'clock. So just 18 minutes past 10, this is when we started to reverse. And let's also mark off the silver bullet time window. Okay, so from 10 o'clock to 11 o'clock Eastern Standard Time, or New York time, or UTC -4. Right, so basically the rules for the silver bullet is that you wait for liquidity to be taken. So in this case, we took out sell side liquidity below the previous day low. We also took out the London low. And then right here, we formed a little low. So if you look at this candle, on either side of the candle, we have higher lows. So technically that is a low. And then you can see this little bit of consolidation was to induce people to go long and put their stops right there. Then they ran the stops. And then we got this shift to the upside. So that fair value gap, that would have been your silver bullet. And that is basically where I entered. I'll show you that in a moment. And then I sold about right there. I bought 2 contracts, and the one I had right on the Fibonacci 618. So this was my last TP, and I was drawn to this level because we also had the fair value gap right there on the 2 minute, and I think this was visible on the higher time frame. I think it was on the 5 minute. Yes, so on the 5 minute we had those fair value gaps. So to me that was a ideal area to exit the trade. And then as soon as we I'm mistaken. So I had my first take profit right there, and then the second one was at the high. I wanted to see if we can gravitate towards that high. So when price action moved up into my first TP, I moved my stop loss to break even. So I made profit on that first contract, and the second one was just a break even. So with the 2 minis, I think I'm about up 400. The first one was a loss, so I kind of jumped the gun and kind of didn't follow my own rules, but I entered in this little fair value gap and then got knocked out, and then saw, okay, but we are in sell side liquidity because we are above the previous day low. So first off, that was a mistake. So you don't really want to go short when we are in sell side liquidity. You want to be looking for longs. So as soon as we got this little move to the upside, and I saw that bullish fair value gap, or busy fair value gap, so a buy side imbalance, sell side inefficiency, so it offered more buy side than sell side. So I entered in this one, sold my first contract right there, stopped to break even, and then as you can see, price action came down, knocked me out. So in hindsight, it was a good idea to move that stop to break even. So sometimes I fiddle with my stop loss too quickly, and then I get knocked out and I leave money on the table or I take a loss. But in this case, it was the right thing to do. After getting knocked out on that contract for about 30 points, came down, knocked out the second contract. All right, so that was your silver bullet. Then it reversed. On the 1 minute, it created these relative equal lows. Basically induced more traders to go long, knocked them out, created more relative equal lows. So this was the low from the morning at 18 past 10, and then right for the lunchtime session. So normally for the lunchtime session, they reverse it. So if we went down in the morning like we did, then for the afternoon session they will reverse it to take out some of the profitable shorts. If we were going to the upside during lunchtime, they would normally bring it down a little bit or just consolidate. So this was basically your trade setup for the lunchtime session. You would have seen that we just came into sell side liquidity. We didn't displace above or below these lows. We tapped into it, then started to move to the upside. So that's your indication that a larger player bought up all of these sell stops. There was a high right there. So market structure shift created the fair value gap on the 2 minute. And then you could have played that little move to the upside to the first opposing liquidity pool, which would have been these relative equal highs or above that high right there. So as you can see, they moved into it, then started to displace to the downside. And now the afternoon session started about 10 minutes ago. So will it continue to the downside? We'll have a look at that in a moment. But just the fact that we made this pattern, so this almost looks like a 3 drive pattern, brought it down a little bit, knocked out the buy side above this high and above this high. So that was relative equal highs right there. So buy stops above these highs, moved into it, started to move away, bearish market structure shift. We'll have to see. It's a little bit indecisive right now. It looks like it could consolidate. So I'm personally waiting until 2 o'clock for my first potential trade. So from this time to about 2 o'clock, you will see stop ons similar to what you would see between 8:30 and 10 o'clock for the morning session. And then around 10 o'clock is when the real move happens. So I normally like to wait until 2 o'clock, play the afternoon silver bullet, and then also I wait for the 3 o'clock New York close macro to kick in. So at 3 o'clock, a lot of times it will start to move towards untouched liquidity. So that's basically my two models that I play in the afternoon, and that's what I will be looking for today. All right, so that was just a little recap of the afternoon session. Let me quickly just okay, so this is just a screenshot from my Ninja Trader with the executions on. So that is where I entered short right there. So that was the mistake. Then I closed it shortly after. I saw that I made a mistake. Then I reversed. So the first short was just a single contract. Yeah, it was a bit of an impulsive move. I knew this wasn't according to all of my entry rules. So I only entered with one. And then I exited that trade shortly after. Then we displaced above that high, creating that fair value gap. Then I entered in that fair value gap, sold one right there. So if you pull your fib from this high to that high, you'll see that the Fibonacci 618 is around that area. So I had my first take profit right there, second one right there. So I got the first one, and then the second one was knocked out for break even. So that was my only two trades for the day so far. All right, so let's do some analysis on the higher term time frames. I'm just going to select a different layout so I don't lose all of my work from today. Clean chart. Okay, so let's start with the weekly. Okay, so like we mentioned yesterday, we came below this low. So sales stopped residing below this low. So we took them. But one thing that I did not notice yesterday was this fair value gap right here on the weekly chart. This one, so this gap starts at 14,244, and then the upper end of the fair value gap is at 14,618. So it looks like we are drawing towards this imbalance. And let's also get a Fibonacci for this leg to the upside. So we have a low right here. So on either side of this candle, we have higher lows. So that is a low, and then that would be your high. Okay, so move the Fib to the side. We have that fair value gap right in between the equilibrium, which is the 0.5 on your Fib, and in between the Fibonacci golden pocket, which is the area in between the Fibonacci 0.618 and the 0.65. You'll see that the fair value gap is squeezed in between that area. And in my experience, this does provide a lot of confluence whenever you have the imbalance in between the equilibrium and the Fibonacci 618. So it looks like the draw on the weekly is towards this imbalance. And let's also get the midpoint of the fair value gap on the chart as well. That's normally a critical level. So I like just using a Fib for this. So this is just the Fibonacci with the only levels visible, the 0, the 1, and the 0.5. And then you can just extend lines right. And then you just basically pull it from the high, from this high to that low. And then you have it. So we have the midpoint of the fair value gap at 14,433. Okay, I just want to do this. So for these larger imbalances, I drawed a little box, and then I like to remove the box and just have the lines there. Okay, so this one we are going to label. This is the fair value gap high on the weekly. Make that white. Just gonna copy that, and then we just paste it in here and change that to low. Okay, and this is the midpoint of the fair value gap. I'm just going to call this CE. So technically this is called the consequent encroachment. I just like to call it the midpoint, but CE is shorter on the chart. Okay, so we have those levels marked off. Okay, the Fibonacci we can keep there. I'm just going to leave it to the side. All right, so if we have a closer look at the momentum master. All right, so we can see that the stochastics are starting to reset. The money flow is the purple line, and a bullish indication normally is when we have the money flow below the RSI, like we have it here, and far away. but it looks like your Williams still needs a bit of time to reset. So this is also in confluence with the draw on liquidity potentially being this fair value gap right here, and then we also have a little one right there. That one right there, which is right at that Fibonacci 786. All right, so with the draw on liquidity potentially being in this zone, we are creating another fair value gap right here, but we need this candle to close for that fair value gap right there to confirm, and that will only happen in 3 days and 4 hours. So potentially what could happen in the future is we come down, we reprice in the fair value gap, and then we reverse towards this fair value gap to reprice in this area. That's just kind of a possible potential longer term projection. So that's just something to look out for in the coming weeks and months. All right, so that is the weekly. Let's move down to the daily. Right, and then we also have these relative equal lows right here on the daily chart. I just want to check what happens. Sometimes I have the visibilities and stuff set to only show on certain time frames. So let's quickly fix this. Visibility, all intervals. Go back to the daily. Okay, there we go. Okay, so the relative equal lows. Those equal lows right there. Make that line a slightly more visible. EQL for equal lows. Okay, so that low is basically the high of the fair value gap on the weekly. So more confluence pointing to this level right here. It's likely if we come into this fair value gap, then it is likely we come towards the midpoint of the fair value gap. So what I will be looking at once we eventually get here is what you can do is you can use a Fibonacci. And you can put in the quadrants. Okay, so if we come down and if we are bullish, we want to see price action either hold the first quadrant and not basically go below the 0.5. If we start to move below the this quadrant is 0.75, then it's likely we could go down and go and visit this imbalance right here, which starts at 13,900 and the lower end is at 13,750. Okay, so on the daily, we know about this liquidity pool. So we have a liquidity pool, a daily chart liquidity pool inside of a weekly fair value gap. So definitely a strong draw on liquidity would be this area right here. And then we have these imbalances on the daily chart. But to me, it seems the weekly imbalance and the fact that we have sell side liquidity below these lows, that this will be a stronger draw on liquidity. And it might first come to this area before coming back into these imbalances and potentially the buy side liquidity above the highs over here. So we have that one on the daily, and there's another one right there. And then right in between these fair value gaps, we have a volume imbalance. So it's the area right there. That's your volume imbalance. And then the buy side liquidity, which will reside above these highs. But I think first we come down to reprice this area. So if we have a look at the momentum master on the daily, it looks like everything is resetting, but remember we have the weekly. The strength still needs to reset, and the weekly will carry more weight than the daily chart. And then if we have a look at the stochastics, it's oversold, but it's not showing really an indication of a momentum to the upside. You see it's kind of, it tried and then it started to roll over. And then also the money flow is above the RSI, so that is normally a bearish indication. So price might need to come down to reset the money flow back below the RSI, and then they can start to cycle to the upside again. Okay, that's the daily chart. So look at the 4 hour. Okay, so this is definitely a bearish market structure on the 4 hour. Pretty strong move to the downside. Lower high compared to that high. So this is basically your structure so far on the 4 hour. Down, lower high, lower low, lower high, lower low. So it kind of makes sense that we continue this into the area that we identified on the weekly chart. Have a look at the momentum master. So the momentum is still coming down. Money flow is above the RSI and far away from it. So that's a bearish signal. So at the moment we have this going on the daily and the 4 hour. So it looks like price will have to come down to reset the money flow below the RSI and then potentially cycle back to the upside. Yeah, we have Illuminated and Prehab in the chat. Hope you guys are doing well. Hope you guys, I saw Prehab killed it with his evals yesterday. Congrats on that. That's pretty impressive. And I see Danny has also been killing it in his live stream for the open. All right, and then the Williams is kind of indecisive, but it looks like there's more bearish signals than bullish signals on the momentum master B on the 4 hour. Okay, so nothing else really, no imbalances. You potentially look for rejection of this order block candle. So that is a 4 hour bearish order block. Okay, let's have a look at the one. Okay, so on the 1 hour, looks like the momentum wants to make a push to the upside. The money flow is below the RSI. So that is a bullish signal. Let's quickly see it with the price action. Okay, so not really any divergences, bullish divergences right now. Okay, looks like a little bit of consolidation on the 1 hour after taking these lows. And then we have a SEBI fair value gap, so sell side imbalance, buy side inefficiency. So it offered more sell side than buy side. Right, so let's have a look on the 15-minute. Okay, so it definitely looks like it's coming for these relative equal lows. Like I said, it made a push to the upside. It couldn't take that high. Quickly see where it got rejected. There's also an imbalance right there on the 15-minute. You can see it looks like we are starting to displace. Momentum is pointing to the downside. RSI is pointing down. The money flow is kind of just above the RSI. And then the MACD and the Williams is both rolling over. So we'll have a look at the Optima and the lower term time frames. Okay, so even though it looks like the drawn liquidity on the daily and the weekly is to the downside, that's not to say that we can't see, for instance, these moves to the upside on the 1 hour to reprice these imbalances. Okay, so I think the levels okay, so this is the local sell side liquidity. All right, so these are the two levels that I am going to be looking out for. So for my entry model, the very first thing is that liquidity needs to be taken. So I want to see all right, so the kill zone has just started. The silver bullet session starts in 29 minutes. But I basically want to see price take one of these levels. And then as soon as it, for instance, comes in here, then I'll move to the lower term time frames. For instance, like a 2 or 1 minute. And then okay, so let's just, as an example, let's say it moves down into the liquidity pool. Then I want to see, so I use the divergences slightly differently to a lot of other traders. So what I do is, as soon as price moves into this liquidity pool, I want to see a divergence form. And recently I've been using the Optima. It's a momentum master indicator. The divergences is a lot more sensitive than any normal RSI or money flow indicator. It works really well. So I've been using it with the Optima. So I wait for that regular bullish divergence to form on the oscillator, and then quickly mark this off. All right, so as soon as I see that divergence inside of this liquidity pool, then I want to see displacement that takes out the high that was formed in this divergence leg. And then as soon as that happens, then on the 1 or the 2 minute, I just enter on a discount PD array. So below the equilibrium, so fair value gap or a bullish order block, whichever looks the best at that moment. And this normally gives me pretty explosive moves. And also because I'm basically buying from sell side, and we know that price action moves from sell side to buy side and from buy side to sell side, and I get these pretty explosive moves from this setup. So this is basically the main setup that I'm using right now. Is from liquidity pools, I look for that divergence, and then if price can take out the high in this little divergence leg, then I just enter in a discount PD array, and then I'll obviously do top-down analysis on the range right here and identify little imbalances, and then I will stack my take profits accordingly. Okay, so pre-app says no trading today in the field today. I'm eating a scalp here. I wasn't going to take any, but okay, sweet. So nice. Pre-app is in the field and trading. That's a committed trader. All right, let's have a look at the dollar index quickly. Okay, so now we had that volume imbalance, so it's starting to break above that. And then in last week, might have been the week before that, we said that these are the major liquidity pools. It was above this high. We had these relative equal highs and another high right there. So that's basically 3 relative equal highs. This week actually go to the weekly. Okay, and then we have another high right there on the weekly. So that's going to be a major liquidity level that we want to take note of. Let's say weekly buy side. Over here as well. So as you can see, it looks like we are starting to displace above this high, which tells me that they are not happy with just taking these buy stops in this area. They want to take the buy stops above this high as well. And then we have this imbalance right here. We came into it once and then started to move away. But I know these things you have to take note of for quite a while. It still will have a big effect on price action when it gets right here. So it looks like the draw on liquidity for the dollar on the weekly is to the upside, and that's also in confluence with what we discussed for the Nasdaq on the weekly chart. We have a big fair value gap right here with relative equal lows on the daily chart. So we have daily buy side liquidity inside of a weekly fair value gap. So in my opinion, that is a pretty strong draw on liquidity. And then if we have a look at the dollar index, we kind of have the same, but just the opposite. We have a fair value gap above us, and then we have liquidity above this high, which is in this fair value gap. So it looks like the dollar is drawing to the upside on the weekly, and the Nasdaq is drawing to the downside on the weekly. So we look at the momentum master. Looks like there's still a little bit of momentum left. Looks like the Williams is starting to top out. RSI and MACD is still pointing to the upside. So a closer look at the price action. Okay, so we are digging into the buy side liquidity. There's not really any signs of displacement to the downside, which tells me they are not happy with only taking these buy stops. They want to go for the buy stops right there. See, there's a high here as well. Okay, so right here we have a daily high right there. So we have buy stops, more buy stops inside of the weekly fair value gap. And this is on the daily. So we look at the 4 hour. Okay, so we had relative equal highs, and as you can see, we displaced above it. So that tells me that they are not happy with the just only taking this liquidity. If we just stab into that area and then displace to the downside, then you know this was just a liquidity rate, and now we can expect lower prices on the dollar index. But that's not what happened. We displaced to the upside, created a fair value gap, came into it, started to move away. So it looks like they will at least run the buy stops above this high. Let's have a look at the 1 hour. All right, so let's came into the fair value gap on the 4 hour, and this is also visible on the 1 hour, and it looks like it just touched the 1 hour fair value gap and started to move away. And then just one other thing I want to point out, over here we had a low. You can see they took the low, they didn't displace below the low, they just tapped into it, and then they basically displaced to the upside, telling us that they bought up the sell stops below this low and it moved away. So now they want to see price move into buy side liquidity so they can take profit. Have a look at the 15. Also inducing more liquidity with this pattern. You have relative equal highs right there, and this is also relative equal highs. So 3 touches, so that's a strong liquidity level. So it looks like they are gonna run these highs pretty soon. Yeah, I don't really think it's necessary to go below the 15-minute for the dollar index. Alrighty. Okay, I think that is the analysis for today. Just to recap, I think like we said, the drawn liquidity is to the downside. If you have a look at this 15-minute, so starting to move below these lows that we discussed earlier. So now we ideally want to see it start to displace to the upside. Okay, so let me just quickly give you what my thinking is, what I'm looking at this afternoon. So we already discussed the possible long. So let's just say it displaces below this low. There's still a lot of room to move towards this level, which is the high of the weekly fair value gap. So what you can do is, let's say this displaces below this low, create a lower high, then you just basically wait. This can be only 5 minutes to the 1 minute, so any time frame between the 5 and the 1, then you just wait for a small little move above the high. Will be a liquidity rate, and that will be your entry in a premium PDA rate. So that will be a rate of the local buy stop, displacement below the low, and then enter in a premium PD array. And then I would say the ultimate target, if you can get it, I would take my last contract off right here if I can get it. All right, so that's been the analysis for today. I hope everyone has a great rest of their day, and then I will see you guys tomorrow.